Thank you to the MC, and I move my role from panelist from the earlier session to be a moderator. And we do have a very impressive line of presenters today, and because it's a very important topic that we are going to, it's actually a continuation of the earlier session if you look at it. Now, we are going to talk about banking 4.0 and technology. What are the major implications and opportunities for banks? And most of the panelists present here are in one way or another supporting the industry, the financial industry, to keep moving and making the necessary adaptation and change for their long-term survival of the financial industry, because a lot of, we saw in the earlier session, a lot of disruptions are taking place in various industries, not only in the banking industry, but in various industries. And therefore, it is very important that the banking and financial sector also prepares itself to preempt any challenges that it will face. Of course, it is going to face a lot of challenges, but how prepared they will be to face these challenges. And here we have distinguished panelists. And first, I will introduce the panelists as we go along. First, of course, the first person is Mr. Peng, who is the chairman of Silverlake. I have not met Mr. Go personally, but in many of the institutions where I have been on the board, I think I have been on the board of at least 7 different banks in Malaysia. Silverlake is a very common name, and it crops up all the time when we are improving our technology. In that sense, although I have not very met you personally, but I'm very familiar about Mr. Go, and he's one of the earliest to start the IT related for financial institutions in Malaysia, right? And you have been very successful also in the Middle East. Because I know I'm also related to some of the Middle East institutions, and we know your name comes up very often. And he has also won the Entrepreneurs Award several times, and he's also an academic involved in imparting knowledge to the younger generation. And without much ado, I will ask Mr. Peng to make his presentation. Then I will introduce the next speaker. Thank you.
Well, I'm trying to introduce the concept of simulation, and I did some charts. I hope they can actually put it up. Now, I have suffered since childhood that I just couldn't understand why people couldn't understand me. And I think there was a mark in history that made it a bit simpler. That was when I was in the very large computer center in Tokyo, University of Tokyo, where I did microchip simulation. And actually I have a picture here, but since the chart didn't come out, so that was 41 years ago. Now, and I just realized that my whole life is about simulation. And what I did was always putting up simulated postulates. It's a kind of assertion, it's a kind of first principles, where you just push your simulation conclusion. Now, in microchip simulation, somebody else will do the experimentation and confirm that whether your simulation is wrong or right. Now, what is the relevance of simulation in banking and finance? it is actually that our whole economy throughout the history was powered by either trial and error, experimentation, or lately, simulation. So that is actually the latest stage of our push in economy. And of course, whatever mathematics you use, no matter how complicated those mathematics are, you finally have to have a conclusion. And that we call simulated postulates. We are not saying that it's true, but it's something that we concluded. Now, if we move on, I will just quickly move on to the conclusions. Can we move the chart down? I will tell you to stop. The previous chart, please. Now, if we look at mathematics, of course, simulators use mathematics. Now, this quadrant, this one was where it started. It was from 2,500 years ago, and then you have Euclid, who came out with the geometry. You have Aristotle, who came up with logic, and you have about 800 AD, you have Al-Khwarizmi that came up with algebra. More or less, that is still the same thing today, except that we know a lot about the whole virtual space. And that was pointed out in 1827 by a young boy at 17 years old, and that leads to the second quadrant. Now, second quadrant is actually, then Einstein came up with the third quadrant, and then today we have new world called topoi. So it has relevance. And if you look at it, first industrial revolution or zero industrial revolution was from long ago until before Newton. Then we did it trial and error. Actually, we believe sometimes we actually pray to God and hope that God will do something. Now, it was Newton that said, well, there's something called forces. And from there, based on a very simple equation, which is F equal to dmv dt, we actually built buildings, hotels, high-speed trains, aeroplanes. It's unthinkable that just a simple equation, F equal to dmv dt, actually created all these phenomena that we would call first industrial revolution or mechanical revolution. Now, it was 1863 or 4 that Maxwell came up with Maxwell equation, that we start simulating electricity, that we start to be able to control electricity in different forms, and that we came up with telecommunication, radioing, and so on and so forth, and that we call it second industrial revolution. Now, the third industrial revolution was unclear, was not very clear, when Vries put up the so-called spectrum postulates that leads to wave and particles debate, that further leads to the relativity issue that Einstein put forward, that everything is relative, which is extremely important. Everything is relative. But this sentence that says everything is relative, so the sentence really relative. So what this sentence is relative to? Now, this is a very mathematical problem. It's a very difficult mathematical problem. So what it relates to? And that was proven by a young girl called Amy Noether, and that was 1915. And today, that part of the proof is called Noether's theorem. Now, because of that, we move on to quantum physics. So today, as of third industrial revolution, we are talking about quantum physics, mechanics, electromagnetism. Now, so what is disruption and demand side. Now, in economy, we come in from supply side for thousands of years, then we are now talking about demand side. But what is demand side? Now, that is the fourth quadrant. Now, disruptions started from your brain. Now, so what you mean by vision? What do you mean by intuition? Now, there are mathematical equations for that. So you finally have four quadrants. Of course, the fourth industrial revolution is going to be powered by your vision, powered by your intuition. And that is the fourth industrial revolution. Now, so let's go to the practical side of things. So what can you do with all this abstract talk? Well, I started the business by one simple simulated postulate. And that is core banking is group theory. Now, why is a long... It will take you maybe 30 minutes to actually explain why. But normally, a simulated conclusion, you don't ask why. Let's try it out first. And that's called realization. So we realized that postulate and became $3 billion company. And then we spend the money into new postulates. Now, I've tested about 130 companies. That means I've tested 130 new postulates. So effectively, I've started 130 startups. Now, my success rate is about 25 to 30%. And that, if you were to ask, why can you have such a high success rate? And it is because of simulated postulates. That you don't just come up with imagination or dream, and then you start moving forward and charging. Well, your chance is very low. So what I'm trying to say is, fourth industrial revolution is a very scientific evolution. It requires you to be very logical, very systematic, very disciplined. And if you look at Google, Facebook, and everyone else, you'll find that is exactly the result of a simple postulate that Google is search, Facebook is connect. It's very simple postulate. Uber is convenient. Alibaba is actually capacity. Okay, it is the fact that China is big. Now it's called capacity. Now every one of them is a very simple postulate. Now, so what, if I can conclude, opportunities are everywhere. We're moving to the stream, the river of evolution of opportunities. But how are we going to catch them? Don't do exactly your competitor do, because there are thousands of them. And you are not. Your survival chance is very low if you are going to compete with all thousands of bright people. You have to find your own space. And you have to start with either first principle, if you do not, I understand it's difficult to command mathematics. If cannot, start with first principle. Otherwise, if you are very good in mathematics, start trying to think simulation. Now, as to future, our kids, we should know by now that nothing, we can never get away from mathematics. Dynasty has rises and collapsed. No, dynasty has rise and collapse. Famous people has come and go. But one thing, mathematics stays for nearly 3,000 years.
Thank you, Mr. Bo. If I can summarize in an ordinary man's language, he spoke about the importance of simulation, trial and error, and even pilots have to go through the simulation process before they are allowed to fly the planes. But a lot of what happens behind the scenes in the trial and error, we won't know. What you see as bankers or supporting industry is the final product. A lot of efforts go in the trial and error process. And he also said that, of course, in the trial and error, 25 to 30% is your success rate. And also, the industrial revolutions all over the world, and the fourth one which we say, they all evolve. They are not born overnight. It's an evolution over a period of time until there is sufficient, content to classify it as an industrial revolution. So industrial revolutions are not born overnight. It comes with, of course, certain key inventions that trigger and then multiply the impact for the global world. And I hope I've summarized your scientific terms in a simple language. Thank you. Our next speaker is Mr. Vincent Chan. He is from Macro Kiosk, and he's involved as the general manager of Macro Kiosk for more than 10 years. And they provide, of course, financial solutions in the digital technology industry. Before joining Macro Kiosk, Vincent was with Telecoms and American Express. So let's hear Mr. Vincent's presentation.
Testing. Very good afternoon to President of Kingsley, Tan Sri Michael Yeo, Dato, Datin, distinguished panelists, esteemed moderator, and members of the audience. The big question today is how disruptive are technologies to the traditional banking channel? From our viewpoint, whether it's disruptive or not boils down to two factors. One has been mentioned this morning by Dato Vaseehar, which is the confidence level, the comfort zone and trust. Those of us who have been around long enough will know that in the 1970s and 1980s, there were deposit-taking cooperatives, which actually collapsed. These deposit-taking cooperatives were actually linked to political parties, but it doesn't matter. And after the collapse of these deposit-taking cooperatives, the government stepped into place. Why I'm bringing this up? Because it boils down to trust. Today, you have many fintech companies in the form of logistic providers. I think you all know who they are. The taxi hailing services. You have aviation companies, book companies who are dabbling into financials, stepping into payments and deposit taking. But if anything goes wrong, people will always say, hey, I'd rather deal with the banks. This is what Dato Ong pointed out this morning. Somehow or another, people find comfort to the banks. So to address the question, no, the banks will not disappear. Okay, the banks will not disappear simply because it is governed and regulated. There is no governance as far as fintech companies are concerned. It's basically free flow. You can do anything that you like. But now back to fintech. Actually, Malaysia experienced fintech early in the 1980s and 1990s. I see Dato Jin Yap is here. He was crucial for launching direct access. Direct access was one of the earlier branch of fintech, phone banking. So we already experienced this long time ago. But what I'm trying to say right now is, why is confidence level very important? Because in the context of Malaysia, we are unfortunate to experience lots of turbulence in terms of scammings, hackings, lots of illicit activities. So this sometimes boils down to confidence level that are experienced by the consumer public. How comfortable are they to go along with fintech companies? Okay, or will they rather seek shelter in the comfort of the banks? So this is a very, very key factor. That is the trust level. The other factor that we like to highlight is availability of infrastructure and utilities. Why it's important is for any fintech to run, you need to have a very robust data plan. Most of us here are using very strong, I would say very up-to-date, sophisticated mobile phones. But you must remember, in the context of Malaysia, majority of the populations do not have the latest gadgets in terms of iPhones, Android phones. Okay, so majority of them are still using the simple phones. What are the deterrence factors? When you are using a simple phones, you could have issues in terms of accessing your data, all your apps, all the tools that you roll out, all this fintech fancy stuff, you need to update it, you need to refresh it. So in terms of updating and refreshing it, sometimes you can have problems in terms of updating your apps. Your phone will be having problem, you could have your phone crashing and all this. So these are all deterrent factors. Now when all this happens, what will be the impact? First thing they'll do is they'll call up the banks. The banks will address to it because they have a 24/7 call center. The question is, does fintech company have 24/7? Do you have all the necessary support procedures in place? If you have a 24/7, what are your costs? Are you still on the low edge cost? What are your fees that you charge? Can you compete with the banks in terms of services and things like that? So it's not so easy. Okay, last year when I spoke at the Bank Tech, I would classify that the economy of Malaysia as emerging developing economies. So when it comes to emerging developing economies, we could face certain barriers, like for example, the behavior of the populations. Okay, earlier on, one of the panel speakers highlighted the unbanked population. Today, Malaysia is experiencing a shift in the workforce whereby majority of the workforce are actually migrant workers. So this is where technology comes into place. The question is, how do we tap into these migrant workers? This morning, the Prime Minister, our dear Tun, highlighted that there's a concern that a lot of these migrant workers are sending money overseas. So the question is, they are still part of the emerging economies, they are still part of the developing economies, they are still part of the eco chain. How do we tap into this group of people? What are the applications and tools that are available for the banks to tap to this group of people? So that's one of the questions that whereby fintech is supposed to come into place and help them. Okay. The other question that we would like to highlight is the role of the youth today and the role of the social media. Today, a lot of young people, you are looking at them, they are dealing with Facebook and Instagram. Can we imagine if one day Instagram were to roll out banking services? And it will be a cross-border currency. The tools are already there. You have Bitcoin and all this cryptocurrency. Imagine if you have Instagram rolling out banking services. How big is the threat to the traditional banks? Okay, so these are some of the questions that we need to ponder about. And lastly, in terms of artificial intelligence, there must be a fine balance between what human can do and what a machine can do. We're talking about artificial intelligence, we have like facial recognition and voice recognition. But of course, all of us have also pondered, what happens today if I fall sick and my face doesn't look good? You know, I have sour eyes, I need to do a banking transaction, and the machine actually rejects me. So then what will I do? So what are the fine threats here? So how effective is artificial intelligence? Can AI actually replace the human factor? And the other thing that comes to the picture is the role of the social media. It cuts both ways. If the bank roll out a solution and it runs very well, then you get praise on the social media. But if you have anything that is a glitch, it can be a minor glitch, something that goes wrong, and the people, your customers will vent their frustration on the social media, then it will be a downfall. Okay, then you have things like rollback. Rollback is the biggest fear word that the banks hate, and the biggest fear word that the user or the hates in the consumer banking or any retail banking's fear. So the role of the social media is also very important. How do we tap into the social media to ensure that we can reap benefits? So these are the roles of the fintech and technologies. Okay. Now, a bit of macro kiosk, what we do, we are a digital technology enabler. We provide secure and authentication solutions to more than 90 banks in Malaysia. We power around 40 banks across the region. What we are doing in the Philippines right now is we are working on a sandbox solution. We are working with a few universities and few colleges whereby we enable our BoPay. Our payment actually works in the colleges and universities whereby it's beneficial to everybody. Let me give you a few scenarios whereby blockchains come to place. When the student in a particular college spends at the college cafe, our solutions will enable the parents to know where does the money go through. For those of you who are parents, I'm sure you like to know, if you give 10 ringgit to your parents, if you give 10 ringgit to your kids, what does your kid do with 10 ringgit? You'll be alarmed if they are buying 4 cans of Coke every day. So as far as our solutions are concerned, and as far as fintech payment solutions are concerned, there's a report which comes into place whereby you will know, as a parent, you will know where does your kid spend the money. What items do they buy in school or college? So this is the itemized detail down breakdown. And similar information is also available for the schools, for the colleges, universities. If you are a high-performing school, you would like to know your top students, what are they eating for their meals? Are they taking junk food, or are they taking excessive caffeine products or carbonated products? And for the retailers and merchants, it works both ways as well. You would like to know what are their fast-moving products. And most important for the banks, okay, all these informations, if the students are spending a lot of money through your payment channels, I'm sure you'd like to know, okay, are they in the affluent category? If they are in the affluent category, who are their parents? Are their parents your customers? Are they staying in a 1 million condo? If yes, is the condo being financed by you? Is their affluent car being financed by you? How do you tap out to reach out to this group of people? Why we are highlighting students? Because we believe students are the future. These are the group of people, they are on the emerging market and they are available on the social media. Thank you.
Thank you, Vincent. So he summarized the importance of fintech and how fintech also needs the trust to win the trust. And of course, banks have an edge over that. If the bankers can transform themselves into providing services that fintech offers, then certainly banks have an edge over the new coming fintechs, because people have enough trust in the fintech industry just as yet. Banks have traditionally been trusted as financial institutions and intermediaries because the banks were formed only after the goldsmiths failed. In UK, I think around the 1800s, goldsmiths were the primary recipients of deposits of people. And when they failed, then the Bank of England was created, and then that's how the banking industry evolved. And therefore, trust is a very, very important aspect of banks, which earlier also we had a discussion about the trust. So that's the leading edge for the financial institutions, that the trust is already there, how you can evolve yourself and adapt to engage with the new technology that is coming online. Thank you, Vincent. And now our next speaker is Dr. Giovanni Butera. He's the CEO and Managing Director of Nixora Group, a data management and analytics service provider based in Australia and operating in the Asia-Pacific region in partnership with several big organizations such as IBM, Oracle, Moody's Analytics, ASG Technology, etc. And Giovanni worked in a variety of senior roles at Capitalia Banking Group, which is now known as UniCredit, and Moody's Investor Services, PricewaterhouseCoopers, and Wipro Technologies. So I'll hand over to Dr. Giovanni.
Thank you very much. Thank you very much for hosting me today. Banking 4.0 and technology. Revolution, disruptions, those are all terminology that in some ways define a situation that is a change from the status quo. But I still struggle in see those definitions as a negative in any way. Actually, change, in my opinion, implies growth, improvement, enhancement of efficiency, and shaking the status quo means also make sure that the organizations that are currently running the show actually are getting more efficient in some ways. Competition means exactly that. So when we talk about banking, I've been working in consulting for almost 20 years, always with financial institutions. So I would like to share with you some of the considerations some personal considerations about what is actually happening, and sometimes also on the confusion that the discussion takes us for various reasons. Sometimes because of our role in a financial institutions, sometimes because we work for a fintech, and sometimes it's difficult to put ourselves outside from the game and see things from a different perspective. So Bank 4.0 means doing banking away from banks. Doing banking away from banks can be interpreted in different ways. Do banking remotely, so you don't need to go in a bank to do banking, or to do banking with institutions that are no banks. But both of them are, I would say, component of the same, let's say, fourth revolution in some ways. So first I would like to point out those two different perspectives to look at Banking 4.0, because when we look at this perspective from a bank perspective, we see a lot of things happening in banks. Millions and millions of dollars investing in transforming banks. Banks collect a lot of data, but most of the banks, they have got not trust in their own quality of the data, the quality of their data. So this fourth revolution is pushing the bank actually in reorganizing their IT systems. When I see banking opposite to technology, then sometimes I remind to myself that banks are the largest expenditures in technology. Every average large bank spends around $1 billion every year just in running their systems. So, generally, if we look at all the industries, I would say that financial institutions are the most heavier investors in technology. But it's a different technology in some ways. There are hundreds and hundreds of systems in a bank that sometimes is the results of merger and acquisitions. So when different banks merge together, the problem that is the last that get faced is actually merging their IT systems. And often, also when there are projects for merging IT systems, the old IT systems are not decommissioned, because in some ways, for 4 or 5 or 10% of their capacity, they are continuing to be used. So after 20 or 40 years of being in business and buying other institutions or merging, we see that, the complexity of IT landscape in a bank is getting monstruously, uncontrollable. So this fourth revolution is pushing bank in addressing this issue, as well as the regulation. The compliance is pushing bank in understanding the quality of their data, in understanding how the data moves from one system to the other. So all those, this is for what concern doing banking away from bank, but still with banks. Then there is the activities of doing banking with institutions that are not banks. So nowadays we refer to Fintech. But this intermediation of banks has been there for hundreds of years. It started with the mutual banks. Mutual banks were banks that were, the shareholders were the customers. And that was the first disruptions for banks that were, owned by shareholders and so on. Then we had another disruptions with, leasing and factoring. But banks, in some ways, they managed to that disruptions, often, creating their own leasing and factoring companies. Then there are institutions there have been institutions that have been providing credit cards and those institutions have got nothing to do with banking. Large retail companies have been issuing a credit card since at least 10 years. Or even airlines are issuing credit cards now. And now we have got these new disruptions that come from Fintech. But sometimes when I look at that as a consultant, I heard always the view from the bank perspective. Oh, somebody's coming into my court, I need to protect myself, or I need to adjust myself, as whether those small companies, fintech companies that are coming in, have got like a very easy life. Now, that is not true. For a fintech to be able to enter into the financial institution world, they need to, face a lot of challenges. Challenges in relation to problem of trust, we just discussed it. Challenges in relation to even size dimension. At the moment, most of the fintech we are looking at, they are very small financial institutions, let's say. Once, things are growing, the complexity of the business are growing, we really don't know how those companies will face the challenge of entering into a new market. And then there is another challenge that often gets completely ignored, the compliance to regulation, to financial regulation. This is one of the most complex areas of the current landscapes within banks. And I will assume that banks have got much more experience in dealing with regulatory compliance than financial institutions. And still is a big challenge for banks to comply with current regulatory compliance. So what about fintechs? Fintechs will need to comply with the same regulations that banks are facing currently now. So, I would like to, first of all, consider this industrial revolution, this disruption that is happening. I would like to enhance a positive view. Yes, there will be 30% of the employees of banks that I don't like to say that will lose their job, that will find different activities to do for their life. And this happened in 1930s, 1940s, when there were other revolutions happening. So people hasn't been there doing nothing. Actually, each revolution has improved our way of life. The way we've been working has been more efficient. We have got a better balance, work and life. And I truly believe that as we go ahead, that is actually what will be the convenience for all of us, including more efficiency, more improvement of processes, new product, will just help us in improving our life. And for what concerns the bank perspective, as they have sorted out those challenges through the last centuries, I think they will continue to face and win these kind of challenges. How it could be? Well, in the last, let's say in the last 3 years, I visited around 25 different financial institutions. And most of those large financial institutions have been investing in what they called laboratory venture labs. Venture labs, banks that put aside 500 or a billion, 500 millions of a billion, put aside to do investments in fintech for two kinds of reasons. One, to understand what are the activities they could run together with those fintechs. And the second reason is because it's an investment that at the long term will bring a substantial return to banks. So, banks, I believe, this is my personal opinion, banks have got very clear what is the landscape in front of them. And I believe most of them have got also very important and effective strategies to face the problem of the competition with fintechs. And so venture capitalism is one of the activities they have been doing, partnering with fintech, actually putting on board most advanced technique to manage the bank. At the moment, the most relevant activities that my company runs with bank is the application of machine learning techniques to improve the data quality of the banks. Okay, so that is an innovative approach that banks are implementing to actually face the challenge of the progress. So I will look at the future positively from all perspectives, from the perspective of banks and the perspective of financial institutions, but most of all for the perspective of all of us, because we are getting a world that is more advanced, a world that is more connected, a world that will work on different premises, but surely in a way that will improve the quality of our life. And the last consideration that I wanted to make is about the merging of the challenges between fintech and banks. A fintech, actually, to be effective in running a banking business, they need two important elements. First of all is capital, second is know-how. Both capital and know-how can come from the banking sector. Banks, to face the challenge that they've got in front of them, they need to understand the new technologies and be able to apply those new technologies. Well, those two elements can come only from the fintech sector. Now there is also the regtech sector, just to understand the complexity of compliance, regulatory compliance. So my message wanted to be not simple but positive. A message where I see a world that is changing, is improving, is getting more efficient, is getting also more exciting. So I hope this is a good omen and a wish for all of us to enjoy the positive that is coming out from what we call the banking 4.0 revolution or disruptions. Thank you.
So the message essentially from Dr. Giovanni is for the banks to embrace and collaborate with the fintechs, so that, because your key word was banking away from banks. People do not have to go to the branches, but you can still use the services of the banks, if provided the banks are able to embrace the new technologies and the artificial intelligence that comes along the way. And sometimes when banks disregard some of the services, other people enter in the market to provide the same services more efficiently. For example, remittance of the foreign workers. There are 6 million foreign workers in this country, and because the banks did not pay attention to that business, they thought it was a small business, then the people like merchant trade and other remittance companies have come and taken full advantage of the neglect of banks not focusing in some of the areas. And therefore, you don't want that to happen with fintech as well. So it is better for you to collaborate and embrace those kind of new technologies and do not disregard or ignore changes that's taking place in the artificial intelligence or the technological progress that's taking place. If I read correctly, that's the message. Thank you. And now we move to the next speaker, who is Mr. Shankar Kanabiran. He's a partner and financial services advisory leader in Ernst & Young, specializing in digital transformation, large-scale banking transformation programs, and post-merger integration. Before joining EY, Shankar was a managing partner with Accenture Financial Services Operating Group. He was also an executive director with Malaysia Petroleum Resources Corporation. So you are Malaysian, huh? Although you come from Singapore.
Malaysian.
Okay. Okay, Mr. Shankar will take over.
Thank you very much. I think, Dr. Giovanni, you touched a lot banking 4.0 and the disruption. I think when EY, we did our mega trends on an annual basis. We try to look at a crystal ball and try to see, what are the mega trends that's impacting the overall industry, not only banking, but generally across the other industry. And I think what we found is, one, the word disruption. We did a poll, in a sense, analysis looking at the mention of disruption from 2016 and 2018. I mean, when we looked at that, the percentage of increase of the word disruption that's being used daily in normal usage. Look at a newspaper, look at the periodicals and everything. We have seen increase of 1,000% in terms of the word disruption itself. And I think it goes without saying, every day when you read newspaper, the word disruption is there. So it's not new, as what Dr. Giovanni was mentioning. But I think underlying this mega trend, I think what we see is the three key drivers that's been there. One is technology, second is demographic, and third is globalization. And what we mean by that is, technology has been there since the Industrial Revolutions, right? You had traditionally you had the Industrial Revolution in the 1800s, where, you had the automated mills coming in, displacing people, and then you had computers coming in, you had internet, you had mobile technology, digital, Internet of Things, so on and so forth. So the technologies will continue to change. The form may differ, but underlying it, technology will cause disruption in the way that we work. Second is in terms of demographics. If you look at urbanization, traditionally 1950, even if you look at Malaysia, the population rural versus urban was 30-70. Today you flip it, by 2030, we will be somewhere around the other way around, 70% urban, 30% rural. So that's a shift in terms of demographic itself, which will impact our industry, like it or not. And third is globalization, right? We looked at, the times where, those days you used to be each country on itself, and then you had form blocks, and then you went globalization in the 90s. But now you're seeing a rise in nationalism as well. People are putting up barriers. People are saying that, look, this is, focus my country first. Then we talk about regional, we talk about global. So these three drivers will continue to drive a lot of the mega trends, one being digital, which is clearly impacting the business we are in today. Second, in terms of a couple of things, one is the gig economy. We're going to see more and more people not fully employed by organization, but are going to work on part-time basis. They may not have full-time employment contracts. They're not going to work with that. Uber, Grab as an example, right? You got a large number of workforce not actually working with an employer, but they are employed on a gig economy as well. And we see a lot of this is impacting as well. Third is the availability of Internet of Things technology that will change some of the industries. Insurance industries, for example, you can see some of the products where, almost everyone wear Fitbit or wearables technology. And they're saying that, look, share with us the data that you have in your hand, and I will customize a product for you that tailors pay per use. So you're finding insurance product that are saying that, the more you use or the more active you are, the less you're going to end up paying, because the more active you are, I know you're going to be a healthy person. So I think one angle that I wanted to raise today was around the challenges FI in terms of the opportunities within the financial services industry, where we are seeing the rise of challenger banks, new bank, virtual bank, call it whatever you want. Hong Kong Monetary HKMA recently launched approved 4 licenses. We had Bank Negara announcing recently that there are going to be 3 licenses being approved. So essentially, challenger banks are banks that are digital-only proposition with no branch network. Their idea is to try to meet the customer demand in terms of, make you think it's not a bank, but it's a lifestyle. So how do I center my proposition around your lifestyle? So for example, Grab Food today, you don't think about, look, I need to use this app to pay the restaurant because I want a food. You think about the activity you're doing. You're saying that, look, I need to order for food, and by the way, Grab Food is meeting that option of getting the food ordered from the restaurant, payment, as well as delivery as well. So a lot of the challenger banks are looking at how can I embed myself within the lifestyle of the consumer rather than making them think it's a banking as a service. And third, they leverage a lot of data as well as analytics to provide personalization services to you. So a student, a millennial needs would be definitely different than a up and coming upper net worth customer as well. So essentially the ability to understand the customers better and to provide point and targeted solution are one of the examples there. And of course, being small and nimble, they are faster, quick to turn around, introduce new products as well. And essentially what they're trying to do is, provide more transparency in terms of the products and services that they're providing to you. So, for example, AirAsia kind of transformed the industry. I mean, if you look at low-cost airlines, right? You get the seat. If you want food, you order your food. You want to pick your own seat. You want to sit together with your family. You pay for that as well. So, essentially, what the proposition the challenger banks are doing is they're trying to deconstruct the costs and the elements of services that's traditionally been bundled together by the traditional banks and provide it as an option to you as well. And when we talk about challenger banks, there typically we see three grouping of challenger banks within the industry. One are what we call as a standalone challenger banks. N26 is an example of that, where these are fintech companies that's coming in offering banking services by providing better pricing, more products, limited choice, but more personalization. The second group, we are seeing technology-led challenger banks. These are like Kakao Bank, V Bank, for example. I mean, they are traditionally a strong technology player. They started as a different, messaging. Kakao, for example, is equivalent to what WhatsApp is for us here. I mean, it's a Korean-based company. They used to start as a messenger services, but then they moved on because as your life centered around WhatsApp today, we do a lot of things with WhatsApp. So what Kakao did was, look, if you're using a lot of your traditional conversation with WhatsApp, why can't I turn that into a banking services? They moved into payments, they moved into banking services, and so on. So the big technology-led challenger banks are the second grouping. And third is what we see as incumbent-led. So these are traditional banks that are saying that, look, in view of these challenger FIs, we're going to launch our own standalone offerings to target the millennial segments and to provide services and to take the challenger banks head on as well. And where we're seeing today is that a lot of challenger banks in Asia are not only startups, but the traditional banks are also going in. For example, HKMA, Stanchart has decided to launch a challenger bank as well. So some of the names we have in this region is like VBank, Yono, Pay ATMs, to just mention a few. But the numbers, I think, as of today, in terms of Asia alone, we have about 20 to 25 challenger banks that's in the different market, and each one are trying to provide different value proposition to customers. So essentially, to the business model for these challenger banks, traditionally we see in 4 different categories. Either they're providing you as an experience, so they're comparing a Uber and a Grab. So how can I make life seamless for you? Using banking application is seamless to you like using Uber or Grab. Second is, how do I create it as a marketplace? So WeChat is a good example, right? They being a center of the marketplace, connecting different ecosystem with you so that you can perform the transaction seamlessly. Third is there are also challenger banks that are offering their services as a third party plugging into large corporate or banks in itself. And fourth, of course, the technology-led banks are also looking at selling their platform as a value proposition, from a front-end digital-enabled platform all the way to the back-end as well. So these are the 4 broad business model we are seeing. But the big question is, how can the incumbent bank react to the changes? And there's a lot of conversation this morning. But I think the traditional incumbent bank have high barriers of entries. It's not easy for the challenger FIs to enter into the industry simply because trust and stickiness of customer. Today, you have your salaries going into your traditional bank as well. So that's an advantage as well, where, if you set up standing instruction, you set up all your payments through the incumbent bank, it's not easy for you to move across. And a simple 10 basis point is not big incentive enough to move to that. So I think from an incumbent bank perspective, the brand and the power of trust is there, clearly. The stickiness of the customer base, simply because you are quite connected, you're more connected to your current bank than what you like to think. I mean, simply switching banks is not easy, let alone moving to a challenger FI, which may not provide the full breadth of coverage. Third, of course, is the regulatory knowledge and product development, right? So you have seen a lot of times where, I mean, while the challenger banks are fast in introducing products, but the question is about the regulatory compliance and the ability to make sure that they comply to the regulation is not easy. I mean, but it's also a challenge to this advantage is also a challenge to the bank as well. I mean, today when I speak to a lot of banks, I mean, they can move fast, but remember, banks are regulated from a different regulatory framework compared to the challenger FI. So you got fintechs, you can say that, hey, the fintech is launching so fast, it's doing this, doing that. Yeah, but because they are not under the same framework, right? So it's not apple-to-apple comparisons as well. But I think from the incumbent banks as well, where we see them clearly responding to this challenger FI is one, they're looking at launching their own challenger bank, as what Stanchart and some of the other banks are doing. Second, clearly they're upping the challenge by improving their digital services as well. So a lot of banks, I mean, moving beyond the standard mobile banking, you can do a lot of the things, teaming with the third-party fintech players and connecting to the ecosystem via open API. So we don't think so. I don't see it as a downside for the incumbent bank. In fact, I think there are a lot of opportunities, and this competition is good overall for as an end user consumer. And I think from the bank's perspective, it helps them to keep up the toe and look at meeting the customer's demand. I think that's all I have for today. Thank you.
Thank you, Shankar. And again, his message was, of course, the agility for the institutions to embrace change. Because we talk about agility among the individuals in organizations. That's the buzzword nowadays. Everybody wants to be an agile leader, or we want to have agility among our staff. But the institutions themselves must become agile so that they can embrace change. The challenge is, because if it is a one-man operated institution, then they can change very quickly. In the 1990s, before the financial crisis, there was a bank, many of you may not remember, called Filio Allied Bank. It was owned by Chong, who owns the Edge Group, etc. Because he was the only one who could make decisions, he made very quick decisions to transform the bank into a very agile bank, and even Citibank was scared of the way they were moving those days. But unfortunately, the financial crisis and forced mergers among the banks sort of made this Filio Allied disappear, and it's probably part of, I'm not sure which group it is today. But that's why the agility is very important for banks to move forward, to embrace technology, digitalization, etc. Next is our Eddie Hu is he is in the Fintech group called Chong Holdings Fintech, and he's helping a lot of businesses with the Fintech financial management. And without much ado, because of the time constraint, I will get Eddie to.
Thanks. Thank you, Tan Sri, for having me here. I will go straight to the points. I'm given 10 minutes, so I prepared 3 slides with 2 diagrams each, so I have 6 diagrams to talk about. 2 minutes each. So straight to the point. So first is about, can I have the first slide? Sorry. So the purpose of having slides is for you to remember my points easier, so that you can go back and tell your CEO what to do next. So banking has been a long industry, But the core fundamentals of banking has not changed. So basically, banks are doing three things: taking deposit from the customers, and eventually lend it out to businesses or individuals who need money. So in between, there will be transactions, right? So transaction like remittances, trade facilities, kind of things. Yeah. So basically, three main activities done by the bank: deposit taking, transactionals, and loans granting, right? So banking has been very comfortable, operating comfortably, peacefully until Fintech came along. So Fintech started to throw in the spanner 10 years ago. So why Fintech is so impactful to the banking sectors? So based on one study done by PwC a year ago, so PwC actually interviewed all the CEOs, the banks, including Dato, I suppose. So 82% of these financial institutions feel that Fintech will be a threat to banking industry. 82% of these people. And 22% of those respondents feel that Fintech will eventually take over at least 20% of their revenues, the banking revenues. So is Fintech a friend or a competitor? So we will delve into that later. And why Fintech has been so impactful and so successful impactful in the financial sectors, yeah? So number one, obviously, is because it's easier to do transaction through Fintech, easier and faster. Number two is also cheaper. I was told by Dato Ong just now, even banks today are not charging for some of the transaction because they need to be competitive, right? Because fintechs are charging really, really low fees for a lot of transactions. So have no choice but banks to retain some of the customers, so they have to be competitive as well. And I think fintech, one area that fintech are doing very well, where banks has not been successful, is increasing financial inclusion. So under United Nations SDG, so we have been, I'm with, together with Tan Sri Yeo with United Nations under SCAP. So both of us are sitting on the digital economy task force. So we have been promoting financial inclusions, especially in those countries, less developed countries, right? So again, let me give you some example. So in Kenya, one fintech company called M-Pesa. M-Pesa has when it first started as a fintech to reach out to those populations in the remote areas, so no banks give it them. So they say just another fintech company. So within 3 years, so M-Pesa actually managed to reach out to about 22% of 22 million of the population in Kenya. So there are only about 45 million population in the entire of Kenya. 26 million are adults. And imagine in 3 years' time, M-Pesa managed to reach out to provide accounts to 22 million of the 26 adults in Kenya. So this can only be done by a fintech company, not a bank, because banks, the business model is totally different, right? So it's really something that banks need to work on to see how it can be performed better. So fundamental differences. Why some of the things that fintech can do that banks cannot do, but doesn't mean banks is irrelevant today. But bank will continue to exist. I mean, from what I think, banks will not be disappear from the world. Right? They have been existing for hundreds of years. So I think banks will continue to be in existence, but will be in different models, will be in different way of doing business. I think 30 years from today, I mean, yes, banking will be still there, but we may not be going to the bank, visiting a bank. I mean, a lot of things will be done in a different way. Yeah? So why banks is so different? Regulations. Banks are highly regulated. I was from the banks before. So now I'm in fintech, so I can compare. So bank is a really highly regulated industry. Whatever that you need to implement, so you need to get approval from the central bank, which may take a long time. But fintech is otherwise. Fintech is more flexible. So fintechs can implement things faster, much faster, easier, and in a way that they feel will be useful to the business. And system legacy. Banks Some banks already, I mean, you can see banks existed for 140 years, 120 years. I mean, can you imagine the system already there from day one? So what the bank has done over the years, they just like a jigsaw puzzle, I mean, put on parts by parts due to requirement. And the scary thing is some parts don't talk to the other parts. That's why when you need to do certain transaction, you need to lock out and lock in again. So this create a lot of difficulties, and especially on the data mining aspect. So a lot of constraint on the bank side. But fintech don't have this problem because fintech is new. So every technology that they implement is for a purpose. That's why it's better. Technology, obviously, fintech is about technology, and most of the fintech owners are not bankers. They are IT-based people. That's why the mindset, the way they think is very different from bankers. Bankers is very concerned about risk management, how to identify risk, how to manage the risk. That's why things get so slow, right? You ask your customer to fill in a lot of forms just to be sure compliance. But fintech, no, differently. Fintechs want to ensure customer get the things fastest. Customer experience is utmost important to fintech customers. And business model. Branch is still, I mean, bank is still operating on the branch network. So banks set up branches to reach out to the customers, and this is very costly. Can you imagine in Hong Kong to rent a 2 shop lots for a branch? It will cost you a bomb. But fintech don't have these issues. Fintech will acquire the customer through internet. So they can just need to have a very small business setup so that they can reach out to a lot of customers. Right? So I'll give you an example. DBS, I mean, closer to our home, DBS, a Singaporean bank. So a few years ago, they started a digital bank in India. So within a very short time of span of years, so they managed to acquire about 1.5 million accounts, customers in India. And do you know how many staff were assigned to this digital bank in India? Only 60 people. Can you imagine 60 people acquired 1.5 million accounts in 3 years' time? And this will not be achieved by any banks in Malaysia, even in anywhere, any part of the world. So for banks to acquire 1.5 million, probably it take many years. Probably you take 400, 500 people to do that. You have a lot of processors back-end processors kind of thing. So it's very different. So fintech is really powerful. So in India, for example, last year they started on this digital identification program. They call it ABRA, something like this. Yes, within 18 months, I was told, so they managed to register 1.15 billion people. And this will not be possible without fintech. And imagine you already have 1.15 billion people registered under the digital identification. What will be the next step? You can just give them an account. So this will help to raise the financial inclusion, I mean, to all the remote people in the remote areas. But banks is still important because of the trust, of the credibility. That's why if today you see large corporations, multinationals, they still deal with banks. Right? So authorities, government, they still deal with banks. I mean, banks is still officially the former financial institution for many countries. But fintech is slowly coming in, slowly but surely, into microfinancing. So fintechs started their journey into the small retail individuals, more SMEs. So they are slowly seeping in, yeah. And they are also doing better in remote areas where banks just do not want to go. Who wants to open another branch in, let's say, a small town with just 40,000 population? So banks will not go. But fintech can reach out to these people. So the other one is, as I mentioned, financial inclusion, yeah. So what will be the way forward? So it's not the end of the world for banks. Yeah? There are still a lot of opportunities. As I say, banks advantage to fintech because of the credibility, because of the trust where people has with banks. So yes, fintech you can take deposit, but normally you will only get small deposits. But big deposit will still go to bank, right? So what banks can do moving forward is to intensify the digitalization program. So banks need to release some of the friction a lot more frictions, right, that the customer is experiencing when they're dealing with banks. So can you imagine today, if you were to take a car loan, hire purchase, do you know how many signatures you need to sign, to before drawdown? You need to sign more than 50 signatures. Can you imagine that? You sit down, you just spend 50 minutes doing nothing but to sign. And you don't even have time to read through the content of the agreement because the officer says, sign here, boss, here. You just sign. So after you sign, you ask, how many signatures have I signed? More than 50. So banks need to streamline these processes. Why do you need your customer to sign 50? Can't they just sign 1, 2, or 3? Yeah, so digitalization will help to smoothen, to speed up, and to make processes cheaper. Right? The second one is open banking. Yeah, in the past, banks always do things on their own, right? They like to develop their own products. They like to develop their own, programs, whatever. Open banking is a system where banks needs to work with external startups, Fintech company, right? So you don't work with big boys like Alibaba. They don't give you a damn, right? They are big enough. So you have to work with those small startups because they don't have any existing customer or less. Imagine if you are already dealing with a startup already dealing with 20 banks. So you want to work with them, they won't be interested because there will be conflict of interest. So open banking is important for banks. Yeah, don't spend so much time developing your own system. Identify a good startup with a good process system. Yeah, 1 more minute. Yeah, so and work with them, and if possible, partnership with these people. And the last one is on the paradigm shift. So banks, yes, all this while we've been thinking banks only doing financial related, but there is a lot of other opportunities where banks can actually tap. Look at ICBC China. They actually a few years ago, in just I think 4 years ago, 2015, they started a e-commerce platform. Why? Because they have so many existing customers. So they established a e-commerce platform where they invited all their corporate customers who are interested to sell their products through the platform to their bank customers. And by doing so, the banks can also provide financing for this transaction. Right? So the bank is doing so much. So can you imagine just from this particular e-platform, ICBC generated about $200 billion from this e-commerce platform. So if banks in Malaysia can do this, I think the banks can also earn extra income. Yeah. So on the right side is a deepening customer relationship. So you have to make life easier for your customers so that at least they will continue to bank with you. Otherwise, they will move all their money to Fintech. Yeah. So new business platform. That's why I mentioned e-commerce. This is one of the opportunities you can think of. Of course, it's subject to Bank Negara approval. And the last one is very interesting. Is virtual bank. Right. I think Shankar mentioned. So Hong Kong already issued 4 licenses. They're going to issue another 4 before end of the year. And this one will totally change the landscape of banking because a virtual bank, your operating costs will be very much lower because I think branch costs take up at least 20-25% of the overall operating expenses. So with virtual bank, I think the whole landscape. But of course, Malaysia, I think Bank Negara also mentioned that we are also looking into issuing virtual banks. I think the best approach is for banks, existing bank, is to work with Fintech company to establish this virtual bank. Don't go on your own because you don't have the technology. And Fintech company will find it difficult to establish a virtual bank because the trust and credibility may not be there. So the best way is to do a collaboration between a bank and a Fintech so that both of them can leverage on each strength. Yeah, thank you.
Thank you, Eddie. It was a very interesting discussion, but unfortunately due to time constraints, I'll pass our next speaker, Chan Kok Loong, who is the founder of iPay88. Please. And we may eat into your time for your lunch by another 5 minutes or so. Sorry.
Okay, I think everybody agreed that Mr. Goh gave us a very good history lesson. I'm a mathematics graduate from UKM. Truly appreciate the mapping and so forth. Now, since we started with history, I want to end our sharing with history as well. Now, Obviously, I can't speak as eloquent as Mr. Goh. He's so good in his mathematics. Maybe he's a mathematics genius. But one topic Mr. Goh wouldn't speak well is history about IP88. That one I'm sure I can speak very well. Okay, IP88 is a payment company. We started. Seriously, I'm one of the co-founder of IP88. When I gone through a lot of interview, people ask me, "Hey Chan, why you are so visionary?" Let me tell you the honest truth. It's not that we are very visionary. It is we are entrepreneur. We are looking for revenue. It all started with a business. Now, it's very relevant for me to share this history because it's all related about banking 4.0, right? Now, when we started, never in our mind that we want to do payment. But today, after 19 years, we are one of the leading payment company in Southeast Asia. We can say that in Malaysia, we command a very strong market share. A market share which is, I think to a certain extent, payment, IP88 is a household name in Malaysia as far as transaction is concerned. And we are very proud of IP88 simply because, not that we founded the company, we actually created a lot of technology. And this technology is Malaysian-made technology. And this Malaysian-made technology able to expand to many other countries in the region. And now we are actually white labeling a lot of technology to banks, to corporate, to insurance company, to telco, and so on and so forth. And of course, a good company have to achieve milestone. To cut short, instead of, if I go through the history of 20 years of IP88, I think it takes another 2 days. To cut short, in 2015, we hit a major milestone where NTT group of NTT Data actually acquire a very substantial share in IP88. And that bring IP88 another level in the playing field. And today, we are not just here to provide a service. We are here to help a lot of companies in terms of digital payment and helping companies to create competitive advantage. Now, this competitive advantage also very much related to banking 4.0. If you think banking 4.0 is very scary, I'm sure all of you Google search what is banking 4.0. The moment if you read those written in Google where people will do banking anywhere, everywhere, and anytime without the banks. I think most of you are banks. The moment you read this, I'm sure you guys are very, very worried. Without the banks. To me, coming from technology and coming from a small, homegrown company with myself and three of us as a founder and co-founder, Mr. Lim and Mr. Chong, we created technology that actually changed a lot of industry. And when I say change a lot of our industry, in modern terms now, the word is being called disruption. Meaning to say we created a lot of payment technology that disrupt the industry. If you really study the disruption, payment is one of the key components of disruption. Without payment, a lot of things are not being disrupted. The reason is very simple. If you didn't get your money, would you commit your service? But if you got your money, you will commit the service the faster the possible. The faster you can do it, your return in terms of time, a little bit of mathematics, you put a component, a factor over time, you will make more money. Example, I always tell the distribution business, especially handphone business. Do you know that one smartphone, if you don't make 200 ringgit, as a distributor, you don't actually make money. The reason, one smartphone costs you 4,000 ringgit. If iPhone can be 7,000, crazy. The cost of funding of the business is so high. If you don't have this margin, no way you can make make profit. Now, because of technology, let me give you another scenario. If you can make 10 ringgit from one phone in 1 minute, and you calculate if one day you got 60 minutes times 60 hours and 24 hours, you can imagine how much money you can make in a day. And if you multiply by 30 days, in a month, you will make huge of money. Now, all these things can only happen because of three things. I hope this Banking 4.0, please take home with you three components, three things that you must know before you leave this hotel. The first one is technology for sure. And I'm not going to talk another 10 minutes about technology. If today you still doubt about technology, something very wrong with you, not the industry. Right? If today you still doubt about this gadget here, you must really see a psychology. Otherwise, something wrong with you. Second, millennials. Let me share with you the power of millennials. Now, if we still think like what we were, the generation, the start with baby boomers, generation X, Y, even Y to me is out of date. The millennials like the alpha. Don't talk about theta. Now these millennials, they matured very fast. Why? Do you realize that why these millennials, 15 years or in Singapore, recently I read, 15 years did a startup and doing very well. 15 years. If you were to go back to history, when we were young, we play marbles. For the guys, marble, gassing and all this. Nowadays, baby born with iPad. Of course, information to them is so easily available. Last time we all hearsay, the neighbor say something, we ran to the neighbor and, hey, what did that guy say? Nowadays, whatever I tell you now, you can start Googling whether I'm telling you the truth or not. Now, if millennial can mature at the age of 12, if the banks still think that to give a financial services to a person who are 18 and above, something wrong with you. It's not the millennials. Millennials will never understand, hey, why banks don't want to give me loan? Talk to the 15 years old who did so well in her startups. People want to buy her company. And easily she's worth maybe 100 million Sing. Banks don't want this kind of customer? Think about it. Now, just now, you see the problem with last speaker is, I'm not playing with my WhatsApp because whatever I want to say, all the speakers already spoken. So I keep on changing my script. So sometimes it's not easy to be the last speaker. I want to say about disruption. Shankar already talked about disruption and he come from EY. Nobody can question him whether true or not because he will give you all the research paper to substantiate his claim. So I have to change again. Okay, the third component that really contribute to Banking 4.0 is speed and data. If you still got problem with data, power of data, you ask Dr. Giovanni. He said, you guys are crazy. Or you guys are blind. What? You can't see the power of data? Look at Herma, supermarket by Jack Ma. Whatever you want to do, whatever you want to buy, whether you got money to buy, whether you can afford to eat that particular grapes or not, the data will tell you got money to buy now. Now that's the power of data. Right? Of course, now talk a little bit about mathematics. Data itself is not so powerful. It's already very powerful. But data with speed changed the world. Data with speed plus application. I don't know what's going to change. The world going to be bonkers, crazy. Now, if in Google people say, wow, so fast. Only first paragraph. Banking 4.0 is banking everywhere, anytime, without the banks. My question is, why not the banks? Why not? Talk to yourself. If you think that, the reason is like what some of the speakers say, you got the trust, you got the branding. Yes, you got the trust, you got branding, but it never stays forever as your key strength. Remember, the millionaires don't trust you and me. The millionaire trusts what is inside Google, what is inside Instagram. Who is Alibaba? Who is Alipay? How many people know Alibaba exists 10 years ago? We only know Alibaba, Alipay, Jack Ma the last 4 years. If you want to bet the valuation of Alibaba brand and any of the bank in Malaysia here, I think Alibaba brand valuation is much higher. Do you agree? Now that is a very important head noted. Meaning to say, your advantage, it won't stay forever. Because the new spending generation are the millennials. These millennials, the more you tell how good is your bank is 100 years old, so what? One Google fake news changed your image already. Do you agree? So, with that, what I'm trying to say is, if you acknowledge that millennials are your key market, key customer in the future, do you still spend time to actually draft strategy to cater for Gen X like me? People like me, I don't care about, financially, okay. But people like us, we talk about quality of life and all these things. It's the millennial that you're going to target. I've spoken to Peter Fong. Peter, from Alliance Bank, one of your sponsors. We totally agree. There's an unserved market where the geeks, those who are the executive in the gigs, the millionaires. Do you know that millionaires do a lot of projects without owning a company, without a company? Are you not interested to finance this kind of people, or you still buta finance only company that individual have a company? Point to ponders, okay? I'm not going to give you answer. Point to ponders. Okay, I know at my time. I just want to share this. I totally believe that whatever fintech that you guys have experienced, these are just enhancement of your current core strength. Do you agree? My question to you is, take from Mr. Goh. Mr. Goh, very expert in mathematics. There's a word called first principle. Nothing new. First principle. My question is, if banking 4.0 not with the bank, the question is, why not with the bank? The key is first principle. Banks got all it takes, financial, resources, contact, whatever it is, including license, to implement first principle. Change the way banking is. Don't sit down from what the bank is doing now and how can we enhance. We should do what Jack Ma is doing. How Jack Ma started, how Alipay started. Let me share with you. Alipay started just because they own a very powerful marketplace. In order the marketplace to be more efficient, they thought of it. Instead of these people keep on using credit card or using bank transfer, why don't give them a virtual account? And that's how wallet started in Alipay. That virtual account changed the way people behave, changed the way people make payment in the digital space. Now, the power of apps. when a virtual account or mobile wallet come with an app. That's what changed the world. That's what Alipay is. It all because of their apps. Why Alipay is so powerful? Now, why I know all this? Because we are partner of Alipay in this region, so we work very closely with them. Whether it's Alipay, WeChat Pay, whether it's Grab, whether it's Gojek, the key is their apps. Trust me. We call it the super app. This app will change the way we consumer behave. The moment you change the world, change the behavior, then you will create disruption. The first principle comes in. Jack Ma didn't start his business. Hey, I want to create a bank. Jack Ma started, I want to create a marketplace to help the SME, to help the small manufacturer. That's what he started his business. Now, Ant Finance is one of the world's largest financial institutions. Am I right or not? Point to ponders. First principle, apps, millennial, disruption in technology for sure, speed. These are the key components. Whatever strategic you all have discussion in the bank, please take these 5 components and consideration. Whatever you all talk about disruption or whatever you talk about, you're going to change the world. You can't change the world without taking care of these 5 components. Right? So with that, ladies and gentlemen, I hope my sharing is purely from my observation as a payment company provider and purely from my working relationship with Alipay, with WeChat Pay, and so on and so forth, and with this region. Now, if we think that we are best in this region, yes, we are the best to some extent. There are so many disruptors in other countries that taking care of those unbanked customers, taking care of those unbanked sector. And these are the big, huge sector that you guys are missing out. With that, thank you for your attention. Thank you so much.
Thank you. With that, we conclude the session. I'm sorry we overshot by almost 20 minutes, I think. I'll hand you back to the MC.